Are we going to see a market crash from here, or at least a major dip? There's some things that we need to consider. I'm going to share them with you in this video, some concerns that I have, some technicals that might actually give us some hope along the way, and also some commentary on what we saw today in the market and what we have to look forward to from here. So I will give an overview of QQQ tracking the NASDAQ 100, SPY tracking the S&P 500, and then IWM tracking the Russell 2000 stocks. And we'll also give an update on Bitcoin as well in this video. So let's start off with the charts, and I'll give some commentary as we go through and see what we had today. So look at today's candle. I said today was probably going to be a bit of a rough day for us. We actually ended up pretty darn close to where we started. Now, mind you, a candle like that could be something that punches us down further. Some things that we want to take heart in. Number one is that the 13 EMA, which is this yellow line, we haven't lost yet. The RSI is also up above 50. That's a bullish thing for us. We have for right now lost that 5-period EMA. So one thing that I'm watching for, and we'll see what happens this weekend, because we have Iran launching a counterstrike against Israel. Anything could happen with that sort of escalation. And that's why I thought we'd get that push down that we got today. Once I saw that the market had run up, I was like, I don't think that it's going to stay here. And so I traded my 0 DTEs accordingly, and it worked out really well for me. In the live stream with Stock Mo, links in the description for the Discord. In that live trading with him, he was also of the same mind, also traded down with it as well, thinking that people won't want to take the risk. Institutions won't want to take the risk over the weekend, especially if there's further escalation. And I want to remind you, not only do we have that to worry about, but there's also the tariffs to worry about. And then we also have Jerome Powell coming out talking about the Fed meeting on the 18th, along with the new summary of economic projections. There are so many things at play right now. It makes it really difficult to have a strong bullish move, in my opinion, for the markets. Geopolitical tension's not great. We want to see that subside. We don't know how soon we're going to get something like that. And then also the tariff news. We don't know what what Trump is going to say about the tariffs in that next week or so. From here, he said week and a half to 2 weeks the day that he said it. And so now we're still in that week and a half-ish range, we'll call it. So we don't know what that deal is going to be. It's probably not going to be great. He's probably still out there playing hardball at this point in time, if I had to take a guess at that. And then, like I said, with Powell and the Fed and that summary of economic projections, what kind of inflation do they expect with a spike in energy prices, which can help spike up inflation as well on top of those tariffs? Might not necessarily be great timing for us. Now, mind you, that leads me to one of my long-term concerns that I have that I want to share with you as we get into SPY. We'll get there in just a moment. I just wanted to show you real quick. Let me go down to we'll do the 10-minute chart should do, and I'm going to reset the view on this so we can see more of what we had happening throughout that price action. Now, we did have that immediate rise followed by a rip down. And I've said throughout the live stream that we're probably going to revisit those lows. That's exactly what we did. And we caught up some buying pressure. And I think a lot of that is thanks to that 13 period that we see in there, as well as some of the major pivots that I have on here. There we go. So where did we find the ceiling? We almost, during the regular trading hours anyway, almost made it up to that 533. Couldn't quite get there. Caught that support at the 13. Back to the 10-minute chart. Let me show you with the day trading technicals on there as well. And I know that this looks like a mess, but let me stretch this out for you. And you're going to be able to see a little bit more clearly where we ended up having those supports and resistances. And I want you to know that all of this that you see on here is drawn before we hit the regular trading hours. All of this was in that pre-market time. And if you guys want to see that, I'm going to start sharing those over at the Discord as well in my expert panel channel. Like I said, links in the description. Code word doctor on the earner tier is really going to help you out. Look where we got that first peak on this through the intraday part of things. Right at 530, spiked up to it, hit it, turned around, came all the way down to that 526 level, which happens to be a 236 level on here for my day trading numbers. And I said in here we were going to find massive resistance. And you can see as we start up there, we kind of hesitated, dropped back down, but it couldn't hold in the face of that sort of momentum. I'm guessing that institutions wanted to make sure they had an excellent position before going in and shorting this thing and driving it back down. So once I saw this thing get up above this level that I thought would be the peak, let me drop down for a moment, just down to the 1-minute chart, just so we can examine that peak a little bit more detailed. There we go. Wait until you see what this looks like. And we'll stretch out a little bit more, and we're going to squish it down. Perfect. Do you guys see that head and shoulders that's on there in this support area down here around the neckline? When we got that retest is when things started to fall apart, and that was at about 121. We got that rejection, and then also all the way down here was the big one. And there's a couple reasons why we got that big rejection in here, and I will move on to my video. Let me take down VWAP for a moment, although that was part of it because we went south of VWAP. But just before we went south of VWAP on that one, we had the 5 and the 13 cross over the 50 on this big candle down. And then we had this rejection off the 13 at 205. That was the big signal that this was likely going to be a sustained sell. And that's what we got all the way down back to where we were at that 526 level, which happened to be just above where this bottom is over here. And you guys can see that we bounced off that pretty good, traded on that. And if you guys were to see that live stream from today, you would see where I called out where we'd find those supports and resistances along the way. And they were perfectly tradable. I traded along some of them and also ended up being pretty darn profitable out of it. Stock Mo as well in the live trades that he was doing. Now let's get into the SPY, talk about this concern. And the same thing applies to the Qs. What we're looking for, and I alluded to it a little bit with the day trading stuff, is the 5 crossing down over the 13. If we get that sign, if we start to trade down below the 13, this thing could soften a bit more from where we're at right now. That would be the first early sign that we would keep going. Right now, from a bullish standpoint, the fact that we're sitting on top of the 13 and found that support is a good thing. The RSI also says so, and we're also up above this peak that's over here, which, by the way, that's where the bottom was on the SPY, and I do have the major pivots for that as well, and they should be showing up here in a second. There we go. Oh, it's that I have them hidden. There we are. Now I have them on there for you, and then you can see where we ended up finding those values as well. For SPY, I don't have the day trading on here for SPY because I usually use the Qs for that, but you can also do very similar things for SPY. It'll still work out all the same. So for SPY, I want to talk about the long-term concern that I have for that. And for it, we have to go all the way out to the monthly chart. First of all, near term, look at all these high wicks that we get right here as we start to get north of 600. And that's one of the reasons why we're having such trouble, because 600 happens to be right here where the white line is going across your screen. And that we haven't had a month. Let me see where this month closed. This was the highest close that we had. It was 609.85 was the highest close that we have, and not above that. And 600, let me see, this one closed at opened at 605. It closed all the way down at 584. This one closed at 599.52. So we're having a bit of trouble closing up above that 600. We just haven't done it so far. Right now, the close for this month is 597, but June is still ongoing. Now for that long-term concern, look at this price action that we have, that rapid rise. And this goes all the way back, let me see, starting in December of 2017, January 2018, just an absolutely wicked and wild ride over the past 7-ish, going on to 8 years. So let me see if I find where the close was for that. There's the close, and we're going to go up to the current close for June. That's a 137.88% climb that we've made. So just in 7 years, we've doubled and put on another 37% on top of it, which is, it's about right. It's about what you would want. So at least 5 to 7 years to double your portfolio. And here's the S&P coming along and doubling and then putting 30% on top of it, almost 40% on top of it. Not so bad. We'll see how June goes. But my concern comes in between this rise that we have in the prices and then not the volumes, but down here at the RSI. Look at the peaks and the fact that we have it descending with the peaks. We still have a bit of bearish divergence happening where we're just, every new peak that we hit, we seem to be a little bit softer than the one that came before it, at least in terms of momentum. And if we fail to catch on to that big momentum, we might get that big sell coming. Now, mind you, this is years long, so it could be years in the making still before we would see something like that. And it's one of the reasons why I don't spend a lot of time mulling over this and worrying about it and just shorting the market, especially where the S&P's involved and how it's put together across the 500 companies, because it's always the top 500 companies that we're looking at, and they tend to do pretty well, and they get inflation adjusted pricing over time. And that's one of the reasons why we stay so darn bullish over the long run. So over the long run, absolutely bullish, with some concern in the short term, or I should say with some of that in the back of my mind still concerned that, hey, there could be a day that comes along where this thing's going to turn around. I don't know that right now is that time. I don't think that we have the signal for that to be the case where I happen to be overall in a bullish sentiment for things. We could be in the midst of a double top. We just don't know it yet. The evidence isn't there. I think it all starts with the daily chart and watching, at least in the near term, what happens with those moving averages. I just don't think that we have the right conditions yet. We don't have the right knowledge to know that this thing is probably going to rip back downward. It might soften a little bit with this conflict that we have, with the near-term catalyst that we have, and I still see those as buying opportunities. So moving over to IWM, with this inverse head and shoulders play, here it is, just in case you haven't seen it. There's the inverse head and shoulders. We actually came down today, and we actually popped down through the neckline a little bit, while the other indices were selling off. The small caps take it on the chin for stuff like this. They're less insulated than the other big companies that are out there. This is still currently alive. And if we take that down and look at the moving averages, this is what I'm talking about for SPY and QQQ, that losing the 13 like this isn't necessarily a strong sign. We're down below the 5, we're down below the 13. This would be a little bit more advanced from what we would see for the Qs, from what we would see from the SPY. It doesn't mean that it's game over yet. This is just one candle down. Below that, the 5 crossing the 13 is that next major sign that we're looking for, along with an RSI that crosses down below 50. So am I ready to switch to a bullish state where I am bearish state, where I'm overall bearish on the markets? Once again, I just don't think that we have that sort of evidence. I do think that de-risking prior to this weekend was the right call, and it's something that I did myself. I went super light into this weekend because I didn't think that risk was the right thing to hold on to. Instead, I went to the cash move for the weekend for my trading portfolio. Investments, I don't sweat them. I just add to my investments over time, and I just let it ride. But for my trading portfolio, very, very super light. Going over through this weekend, I did keep a hold of one of my penny stock plays out there. I believe it wasn't REKR, it was the other one. It was AREC. I'll show you that one as a bonus in this video, which, by the way, if you guys do want to see my buys and sells, I'm up over 11% on that swing trade on AREC as of today. I just put it out yesterday late in the day as we saw a volume spike during that last maybe 30 minutes or so of the trading day. Said, hey, I took a couple shares of this. Here's my transaction. You guys can check it out over at the Discord. Links in the description. If you want to see my expert channel and the other experts channels over there's a whole team of us there to support you in this journey, in this process for financial freedom or building alpha in your portfolios, tracking the market, seeing what the trends are, seeing what's moving. Come on over. Join the thousands that are already members of that community. Stockmo over there as well. I'm doing live trading with them this summer as I'm off, as I am a teacher for my career. Have a huge passion in finance. Do this kind of stuff all the time. I have multiple degrees in education, and why that's my true passion is bringing those two things together, the finance and the education, sharing it out here on YouTube. Guys, links in the description, code word doctor, coursework. If you want to know options, technicals, if you want to know the real impact of what I'm saying, if you want to learn to do this yourself and trade using those technicals, the coursework through Stockmo Academy is absolutely where you want to look. He's a personal friend of mine. For the last 17 years, as a matter of fact, we've been like brothers to each other, been through the thick and thin of everything, and now we're back together working in the financial space. And I can tell you from my career as an educator with an earned doctorate in education that checking out those courses, they are the best that you're absolutely going to find. So guys, links in the description for both of those. Code word doctor works to get you a discount on either one. For the Discord, 50% off your first month sign up. For the coursework, it does give you a massive discount on those. I'm not really sure the exact dollar amount, but it's huge. I was actually surprised, like, really, Mo, that much? That's how much you're gonna do? He goes, yeah. He goes, these people need it. So you guys can check that out. Bundling the courses is gonna save you even more. Plus, they're a match made in heaven, just like me and Mo. So guys, back into the charts on here. Let's talk about Bitcoin, and then I haven't forgotten about AREC. We'll look at that as well. So for Bitcoin, look at that bounce that we get off the 50 EMA. I gotta tell you, so this is actually a really nice progression. From the Qs, back to the daily chart, where we got that support right at the 13. So let me put that middle on screen for you. To SPY, where we got that support right once again at that 13 period moving average. To IWM, which had that push down through the 13. to Bitcoin, which not only pushed down through the 13, but also found the 50. This is the sort of thing that I watch for those opportunities, because we may have pushed down through the 13, but man, look at that support that we got, that buying pressure that came off of nearing the 50 EMA for Bitcoin. This is a beautiful progression for showing what can happen as you move down through these moving averages. Mind you, we don't have a cross of the 5 and the 13 yet to say that we're in a bearish state right now. Plus the RSI, 49.83. I'm not convinced that Bitcoin is going to push much lower. Now, mind you, crypto can be a good way to assess risk over the weekend as news might develop through Iran and Israel. We'll see if the US really gets into any sort of direct involvement or anything like that, things can really get crazy for us. Watch those energy stocks. ERX was one that I already talked about. Pulled back pretty heavy today before also getting a candle much like this one. Here, I'll show you. There we go. This is a 2X Bull Energy ETF that we're looking at. So for this one, we pulled all the way back to 53 before closing all the way up at 55. We opened up almost close to 56. So if this thing's really going to get wacky with the war in the Middle East, that can really do a lot to push up those energy prices. And so this is one of those places where you can go to find it. We're near the bottom of this trading range. We might be able to punch back up into that. We're going to have to watch and see what happens, what comes our way. Now for the penny stocks, I talked about my best penny stocks to buy now. This one had, I think, let me see, it's up at the top, 11.59% up today. I said yesterday, late in the day, we got some pretty decent volume for a late in the day pop. Nothing like what we saw the two previous times. But if you look at what we have happening with the bottom of this thing, after we popped on this thing, it's starting to round back up on us. We keep on getting higher lows, some higher highs in there. We're up above the 50. We're getting the 5 above the 50. We're getting potentially the 13 above the 50. It would really help out if the overall market bias continues to be bullish. This thing could pop back up over $1 on us, lickety split. And so I have that swing trade going, small risk position, because penny stocks like this one, super high risk. Again, the ticker, it's in the back here. You guys might be able to see that watermark. Let me know if that's bright enough. I can always make it more opaque for you to see, brighter on the screen. AREC is the ticker. This is the daily chart that we're looking at right now. And I think that this move could just be beginning. So let me summarize this thing for you for what I see coming for the markets. Right now, I think it's a moment to be cautious, and I think that's why the market sold down the way that they did. And the market, definitely much smarter than I am. I just kind of follow the waves, ride the waves up until I'm a billionaire. At that point in time, I might be able to cause some influence of my own, but hopefully not enough to be called out for market manipulation. I definitely wouldn't want that to happen. So on that journey that we have going on here, I went in very de-risked with my trading account for this weekend, because like I said, it's really anybody's guess what we're going to be looking at coming up next. I want to wait for the weekend to be over to see that next signal, that next direction. Do we catch that support at the 13 for the Qs, for SPY? Are we going to pop back up over that neckline for the inverse head and shoulders for IWM? We're going to have to watch and see the news that develops over the weekend, whether it happens to be the Israel-Iran news, if it's the Trump tariff news, what the market's doing to assess the risk leading into the Fed meeting. Are we going to get hawkishness because of potential inflationary pressures coming from that with energy prices? If they're going to continue to rise, the tariffs, that ends up being not a great deal in terms of inflation. That makes for a more hawkish Fed. So I do think that this is a time to be cautious. If it wasn't Friday, I would have taken a short hedge position from when I thought that we were near the top of the market. However, it is the weekend. I don't want to eat that weekend risk with those short hedges because I use options, and that theta decay is really going to chew in because I would use short-term options in order to keep it cheap, but yet aggressive enough to actually make sense for what I do. And like I said, if you guys want to learn about those options, there's a course for that, and it is small, easy, but powerful with the way that Mo and Mrs. Mo have put that together. I wouldn't change a single thing about it. In that technical analysis course, if you struggle with technicals, if you struggle learning how to get your trades right, your timing right, that coursework can absolutely help up your game, take it to the next level. I know it has mine. Remember, code word doctor is the thing to remember. It's really going to help you out financially. When you sign up for those courses, bundling with the code word doctor is going to be that best deal. And if you want to join the thousands who have already joined our Discord, that link down in the description for the Discord, code word doctor, works for that for 50% off your first month when you sign up for their earner tier, and it gets you unrestricted access to everything that's offered to that community, including the expert panelist channels, and then the live trading that's over there. And then we also have an Ask the Expert channel, and then you also get the bread bot, the AI tools, the advanced charting tools, you guys name it, the products and services are seemingly endless. It really is an ecosystem that's there designed to support you. And once again, just like the courses, it's the best I've ever seen. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you next video.